So today in accounts, we'll continue looking at the trading account, and we're going to look at the formatting of the trading account. So this is how we can write down the formatting of the trading account. So as you can see, we have 4 columns. So we have the first column, we have the second column, we have the third column, and the last column. So here we can say title of trading account, and the first item that we record there, we say sales. So we'll put our sales there, and our sales, we're going to record them in this column. Then we're going to say less sales returns, and we know that sales returns are also referred to as returns inwards, so we'll put there. And when we find the difference there, we're going to get this answer. So this answer is referred to as net sales or turnover. Then after you do that, then you're going to say less cost of sales. Then you're going to start with your opening stock. So opening stock we are going to put here. Then you're going to say purchases. Purchases you're going to put here. Then you say less purchases retains, and we know that purchases retains are also referred to as retains outwards. So less purchases retains. So when we find the difference there, we are going to get net purchases. Then, since we are following the net purchases, then we can say add direct expenses. In the direct expenses that can be incurred by the business include carriage inwards and wages. So we are going to add direct expenses. So when we add these figures, we're going to get an amount here. Then we're going to add our opening stock with this figure, and we're going to get cost of goods available. So this is going to be cost of goods available. And since we have cost of goods available, we can say less closing stock. And less closing stock there, we have to find the difference. So let us continue to this side. So we can continue that side. So we'll say cost of goods available, less closing stock, and we're going to have cost of sales. And the cost of sales, we're going to put them in the last column. And that means that we need to find the difference between net sales and cost of sales. And the answer that we're going to get is gross profit. So this is going to be the formatting of the trading account. And for you to understand this formatting, the only thing that you're supposed to do is to understand the formulas. So if we start with the first part of this table, we have sales minus sales returns. And when we started looking at the trading account, we said that the formula that we use when calculating net sales we say this is equal to sales minus sales retains. And as you can see, like this formula, you can see it from here. It is sales less sales retains, and we have net sales or the turnover. We also said that we can calculate cost of goods available for sale. We said that we can use this formula. We said we can say opening stock plus net purchases, then plus carriage inwards plus wages. So we can see this part of the formula in our table. So here I said less cost of sales. Then as you can see, we have opening stock. So we have our opening stock there. Then we said purchases less purchases retains. In this part of the formula, you can see it. This part of the information, you can see it in the formula, which is this part. So which is the net purchases. So that's the net purchases there. Then it says add direct expenses. And the direct expenses there, we are meaning carriage inwards and wages. And if you do that, we're going to have cost of goods available. Then the other part of the formula that you need to understand, we said cost of sales is equal to cost of goods available less closing stock. So you say cost of goods available less closing stock. In this part of the formula, you can see it in the table. We said cost of goods available, which is this figure, less closing stock, which is that figure, and we're getting cost of sales, and we find the cost of sales this side. Then the last part of the formula that you need to understand is gross profit is equal to net sales minus cost of sales. And this part of the formula, you can see it in the table. You just say net sales, which is also referred to as turnover, minus cost of sales, and we're getting the gross profit there. So this is the formatting of the trading account. Where you have questions, please ask. Let us now look at an example for the trading account. So we have this example that we're going to use, and you can read the example on the screen. So the example reads, from the following trial balance of Alexi, you are required to draw up a trading account for the year ended 30th June 2003. So we have that trial balance. So we have sales amounting to 678. We have purchases amounting to 145. We have retains inwards amounting to 123. We have retains outwards amounting to 50. We have carriage inwards amounting to 100. We have stock amounting to 200. We have rent amounting to 45. We have advertising amounting to 237. We have electricity amounting to 75. We have building amounting to 200. We have furniture amounting to 17. We have debtors amounting to 23. We have creditor amounting to 250. We have drawings amounting to 19. We have bank loan amounting to 423. We have cash amounting to 345. We have bank amounting to 450. We have capital amounting to 671. We have wages and salaries amounting to 134. Then we have discount allowed amounting to 67. We have discount received amounting to 89. We have rent received amounting to 34. We have carriage outwards amounting to 17. Then the inventory at 30th June 2003 was 145. So we are supposed to prepare the trading account for Alex. So the first thing that you're supposed to do is to put up the title. So I've written the title here, and the title is going to read Alex C trading account for the year ended 30th June 2003. So that's the first step that we're going to do. And since we have been given this trial balance, we need to identify the items that are placed in the trading account. So we'll start with sales, and sales amounted to 678. And since we have our returns inwards in our question, that means that we're supposed to subtract them from sales. So we are going to say less returns inwards, and this amounted to 123. So we're going to say 678 minus 123. Our answer there, we're going to have 555, and that's going to be called our turnover or net sales. Since we have recorded our turnover or net sales, the next thing that you are going to do, we're going to say less cost of sales. Then we are going to start with our opening stock. So if we check in the question there, our opening stock is 200. So we're going to put our 200. Then the next thing that we're supposed to record is our purchases. And our purchases amounted to 145. And since we have returns outwards, that means that the returns outwards, we have to subtract them from purchases so that we can get our net purchases. So we're going to say less returns outwards. And our returns outwards there, we are having 50. So we're going to say 145 minus 50, we're going to have 95. And that's going to be called net purchases. And since we have calculated our net purchases, now we are supposed to identify the direct expenses. And examples of direct expenses, we have carriage inwards and wages. And since in our question, we only have carriage inwards, that means that we're going to add carriage inwards. We don't have wages. So we'll say carriage inwards. And we have to take note of something. The wages that we are having, this wages is combined with salaries. That means that in this case, this is going to be an administrative expense and it's not going to appear in the trading account. So that means that we're just going to add our carriage inwards, and our carriage inwards there, we're having 100. So we're going to say 95 plus 100 there, we're going to have 195. And there we can add our 200 plus 195. So we're going to get cost of goods available for sale. So cost of goods available. So say 200 plus 195. So we're going to have 395. So we can continue this side. Since we have calculated our cost of goods available, then we have to say less closing stock. So for you to differentiate between the closing stock and the opening stock, the opening stock, you're always going to find it in the trial balance. Then the stock that is given outside the trial balance, that's going to be your closing stock. So if we check there from our question, our closing stock, we're having 145. So we are going to say less closing stock, which is 145, and we're going to say our cost of goods available, we're having 395 minus our closing stock, which is 145. So there our answer, we are going to have 250, and our 250, that's going to be cost of sales. And there now we can calculate the gross profit or loss. Since in our case our net sales is greater than cost of sales, that means that we're going to find our gross profit. So we say 555 minus 250, our answer, we're going to have 305. So that's going to be our trading account. Where you have questions, please ask in the group. So this program has been brought to you by Jos Wale. If you want to get connected with me, you can actually check out my social media platforms. I'll meet you next time, and peace and God bless.